going through some of the numbers for October 2023. And we all know that sales are down significantly. However, average price for October was up just over 3%. And when you're looking at the average price, it's been up over last year, month over month, since June. So from June to October, the average price has continued to climb. Why is that? We don't have a lot of inventory, and that's been an issue over the last 5 to 7 years, where inventory continues to lag behind demand. And so where are we seeing right now? We're seeing a lot more inventory, that's for sure. We're at about 3 months or so of inventory, but it's still a seller's market. Until we hit the 4 or 5 months of inventory, we're going to get into a balanced market, and then eventually it'll get into a buyer's market. But with what's happening right now with the Bank of Canada, and they're holding off rates with the promise of rate decreases to come mid-2024, end of 2024, you're going to start to see some of that inventory depleted, because buyers are going to jump off of that fence in order to get into their house prior to everyone else jumping into the market as well. So look over the next few months to have some more sales on the market, and also to eat away at that inventory that has risen over the last little while. When we're looking at average price too, it's important to note that we're not seeing those 15 or 20% declines that people have been talking about. Now, what's going to happen when renewals come into play over the next few months? We're not really sure, because there will be a lot of people that are in trouble and can't renew at the higher rates compared to what rate they were paying over the last 5 years or so. I think the best bet for them is probably to speak to their mortgage professional and go with a shorter term, maybe a month or 6 months, or a year or 6 months, or even 2 years if they wanted that comfort that there are going to be rate decreases coming up that they can take advantage of over the next year or two. If we're looking at average prices, you're going to see that York region is down about 3%. We've got Durham region down almost 8% in average price, and this is compared to last year at the end of December. You've got Peel down 7%. Toronto is down about 3.3%. Now, why is that? If we have inventory issues, and I'm saying that prices are continuing to climb, we're talking about average prices. And the important thing to remember is that detached homes as a whole across the Toronto Real Estate Board have been down in terms of sales. And that is the hardest hit segment, because it's the priciest segment. And that was affected by the mortgage rate increases. There's a lot of people that have scaled down what they wanted to purchase because of the interest rate hikes, or they've just put their search on hold. And once we have some stability with the interest rates, that segment is going to bounce back, and that's going to contribute to a higher average price. So right now we're down about 7,000 sales compared to what we did last year, and where we are year to date right now. There's 7,000 less detached homes that have sold. Add those back into the mix, and you're going to probably have a 2-3% increase in average price. November and December are coming up. We'll eat away a little bit at that 7,000 shortfall, but it won't be enough or significant enough to really boost the average price. So look for average price to be close to flat across the board. And what we're going to see in November and December, we might, if we stay on pace as last year's, we might have another 7,000 sales, ending up at 65,000 sales for 2023, which will be one of the lowest totals that we've seen on TREB. Last year was a quiet year. We had 75,000 sales. So sales will be down for sure for 2023 over 2022. Average price will be close to flat, might be down about 2%, maybe 3%, depending on how many detached homes we sell. There's a little bit more consumer confidence out there after the last rate hold, but let's see how it fares over the last 2 months of the year, and see how we're for 2024. I think 2024 is going to be a little bit better in terms of number of sales. There's been a lot of pent-up demand, people waiting on the fence, and as soon as they see that there's some stability with the interest rates and the possibility of them coming down, you're going to start to see more people jump in.
RE/MAX Prime Properties.